Today I decided to do something a little different. I decided to come to you to explain a couple things. One of the hardest things to do is actually try to articulate a skill that has been learned over time in a small time frame. We all know that if you're looking at YouTube, you want to get answers immediately. You're not looking for really the layers upon layers that it takes in order to make an informed decision. What I like to call the collection of truths. You just saying, tell me what to do so I can get the result that I want. So on the day, I want to talk about one of the things that's important, because it doesn't matter if whatever your product is, if you're an investor, whatever the product or service is, I want to really explain the success rate so that you understand that it is not uncommon for you to be deciding to do this and then losing all your money. So let's go at a couple things to kind of help you stay in the game so you don't actually lose your money. We live in a society now that loves to function off of anticipation, excitement, but not necessarily all the truths. So let's take a look at the board. Now, the success rate for a new investor is estimated to be around only 10%. Just 10% now. Remember, 90% of new traders or investors lose their money. It's not even a question. This is being modest, so I want to use a modest number, but the realistic standpoint is it's less than 5% of the people are going to be successful. Whether they become an investor and whatever the product or service is as an investor, only 5%, that means 95% of the people actually are not successful. In this case, we want to use the 90-10 rule, so we're going to use a conservative number here. Next, leverage your money instead of deploying it. Here's the thing that's important. If you're going to learn to be an investor, and I'm going to specifically just talk about this regards, in a bear market that we're currently in, before I discuss any stock symbols, before I talk about any entries or exits or what type of direction that I may believe the market be going in my personal life, what I would do, not necessarily what I suggest for you to do, but what I would do, I want to first look at some things that's important to know before I go do anything. 1, leverage your money instead of deploying it. 2, develop consistency of making capital allocations. And 3, use the power of cash, entry, and interest. Again, I want to use the power of cash, entry, and interest. Now, some people may call this strategy here A, B, and C, the 3 powers. They call it the 3 powers. I just call it the 3 businessmen. That's what I call it, the 3 businessmen. My cash, the way I enter a transaction dictate the outcome, and the interest that I'm making while I'm waiting to exit. Those are all 3 things that's important to me. Now, how come I started with this? Because allow me to tell you something. If you're watching YouTube right now, you never like, subscribe, or follow our channel, please don't forget to click the bell icon so you can get the latest uploads when we put them out there. Again, our channel has a lot of things that's out there in the marketplace that you can benefit by. But the most important thing is, if you really want to get in the meat and the potatoes and you don't want like a overview, you want to get foundation, then you definitely want to hit the subscribe button, because that's when I go in there and I begin to explain things from my perspective. Yes, from my perspective, telling you what I did and what are the things that I did when I did it, because that's really what you want to know. You don't want to know the outcome always. People say, oh, if you see me with something, you're seeing something that I had done years ago and you just seeing it come to fruition because you're now seeing it. But just understand, whenever you're doing business, there's a lot of downtime that nobody see all of the different skills that you're getting. And that's where the subscription come into play, because that's when you begin to gain skills. That's why I have my American Investor series. So if you haven't hit the subscribe button today, make sure you hit it. Now back to this, the power 3, cash, entry, and interest. Whenever you think about a trader, and let's go into this, I keep hearing people tell me, oh, this is the time for real estate. Let me just explain something to you. We're going to use a couple of words here. We're going to stick to it. We're not going to deviate. We're going to talk about here the investor. And we're going to talk from the investor standpoint. We're going to talk about a trader and an investor. Let me just explain and remember this. This here. Okay? That a trader and an investor, a new trader or investor, whether you are flipping houses, what a lot of people like to do, a lot of people like to go and like to flip houses. If you do that, that's fine. You can flip houses. That's your prerogative. But let me just explain something to you. If you're flipping a house, you're a trader. You just move from one house to the next house. You just look at it. When you think about someone who's trading stocks, a swing trader is somebody who holds something less than 6 months, from 0 to 6 months. So if you have a property and you fix it up and you flip it, then you're looking at holding it less than 6 months, especially if you do it less than 12 months. So you pretty much, you're a swing trader. For somebody who uses paper assets, you use a paper asset as well. You're just using it called a promissory note. You flip on promissory notes. You may say, well, I'm doing real estate, but I do leases. Oh, so you write residential perpetuity. So you're a bond writer. You just do 12-month bonds. That's what you write. Local, city, or county bonds in that city where you call it a land lease. So you're a bond writer. They call it perpetuities. Most of you just think I'm in the real estate. No, you're really a bond writer. Someone says I'm in the stock market. Oh, you use paper assets for leverage. So once you understand that, then you say, well, what companies should I write assets on? Or what is the product or service should I write as an investor? Well, now you get into the nitty-gritties of understanding that as an investor, you have to understand that there's 10% of the people be successful, but 90% of them are not going to. Again, 10% going to make 90% of money, and 90% is going to lose all their money, but only 10. If we're going to be very strategic on this, I'm going to say 5%. So if there's 100 people, there's going to be 5 of them that'll be very good as they begin to develop the skills. At first, you have to understand that first, if you don't have somebody in your team who's proficient and who has experience, not just getting in a deal, but knowing how to get out of a deal, and if they don't know how to get out of a deal, how they can sit down in the deal without causing harm to anyone, especially if it's their business compadres. Now, I share that because when you're using the 3 powers here, cash, entry, and interest, you have to understand that your first perspective is this. I don't care what it is, real estate, paper, crypto, you're an investor first. Next, you're going to be dealing with, again, real estate is paper assets. People want to tell you, no, it's hard assets. No, as soon as you make no money in real estate at all, unless you write a perpetuity, a lease, unless you write a perpetuity. Now, you may say, well, if I hold the note, okay, now you're writing a 30-year perpetuity, because now you're writing 30-year bonds versus 12-month bonds. That's what a residential lease is, or that's what a commercial lease is. Whatever the terms are, that's the bond that you're writing. And it can be securitized by, if you default in the local city based on your state, you can take them to court, civil court, and then get that to be represented on their credit. So with that being said, when you're going at this route here, you need to know that when you first start off, this is the critical part. You got to master really making capital allocations. If you only have $500 and that's all you have, and that's what you started off with, how long will it take you? Because part of it being an investor is making sure you're making these capital allocations for yourself. Without somebody force you to do it, you have to get in the habit of doing it yourself. Like if you only have 500 now, how long did it take for you to get 500? Because if you misappropriate 500 and it took you a whole 12 months to save 5, or 90 days to save 5, save $500 then that means if I misappropriate this money now, it'll be 90 days before I can do another deal. But you lost all your money. So now you have another 500. And it took you a total of 6 months. And you may say, I have 500. Nope. You got $1,000 that you have to get a return for. The first 500 you misappropriated. The second 500 you haven't had a chance to misappropriate it, but you still ain't gaining skills. You're about to misappropriate again by being what? Not using the power of my cash, entry, and interest. And also, because I really developed this habit in leveraging my money instead of deploying it. If you have to spend money, there is a saying says, in order to make money, you have to spend money. That saying is 50% true. Let me explain what I mean. Most of the time, you have to leverage your money, but you don't have to spend it. So you do have to have money to make money, but you don't have to spend it in order to make money. You can actually leverage it and still make money, but it never left your bank account. For many of you guys who's being a new investor, you guys don't understand that. And that's the reason I always say, hop in, join the subscription so you can actually understand how do I be an investor with leveraging my money but not deploying my money, because that's where the mistake comes in. The reason that 90% of the people lose all of their money is because they deploy. They don't leverage. They deploy. They spend it. The word is spend. They spend it in a way that you can't get a return. And because people are doing that, they make this rule that remember that 90% of new traders or investors lose their money. They make it to be true because they're not leveraging. Two, they got a bad habit because $500 and it's taking you literally 6 months to do it. That's too much money up front. Now you may say, well, I can't go out and buy real estate with $500. Depends on who's in your corner, who has experience, because they'll tell you that. Some people will tell you, yes, you can. Other people will tell you, no, you can't. It depends on what type of investor you're going to become, because each investment that you do has a different strategy. And that's the real key. Learning about how your personality is, what about your past, how you wired, that's really critical when you learn to be a new investor. Because the only thing you think in your mind, how can I work for myself and make as much money as everybody I'm seeing? There is so much information out there. And of the information that's out there, it is not coming from the billionaires. It is not coming from multimillionaires. Now, there are some billionaires out there that's having a conversation with you. But most of the billionaires are running companies and they're talking about their company and they're not revealing that inside information that we like to call competitive advantage. It's not for public domain. They don't sell it. They're not on, when they're on YouTube, they're actually talking about what they're doing and what the economy is. They're not telling you their inside track. You won't even know what they're investing in until after they already did their leverage and their entry, just to be very clear. But for those of you who are new and you're excited and you have some money, you need to really figure this part out here, because you cannot afford when it takes you 90 days to save $500. You may say, I got 10,000. Okay, well, how long will it take you to get another 10,000? You got 100,000. Okay, well, how long will it take you to get another 100,000? And once you begin to address that question, if it takes you 6 months or 2 or 3 or 5 years, you're using too much money from the start, period. It's because it's taking you too long. It's taking you too long to get that same amount out. So when you come to developing a consistent of making a capital allocations, you need to learn. Because if all you can do is $100 and it takes you 90 days to do $100, start there. I don't care if somebody tells you, oh man, you need to get $300. No, because it's going to take you 100 here, and then it's going to take you another 5 months before you get this $600, because you really only can bring in $100 consistently. So start there. With $200 today, depending upon what leverage scheme you're using and what type, again, as a new investor, what asset class are you trading? Are you trading bonds? Because if you're in real estate, you're really a bond writer. I know people don't want to openly confess that. You're a local municipality bond writer. Look at your leases. If your lease says 12 months, that's what you do. If your lease says 24 months, you write 24-month perpetuities. They're residential lease bonds. That's all it is. That's a legal tenant. It's a legal asset class. I always find it interesting when I'm talking to somebody and they say, oh man, I'm in real estate. Okay. What do you do? I rent properties. I got about 10 properties I rent. Okay. What are your terms? 12 months. So you write 12-month bonds. That's what you do. Now I don't write bonds. What do you think a residential lease is? It's a perpetuity. That's a bond, guys. Just understand that. Now, with that being said, let's go to the next one. The power of cash here. Now remember, if all you got is $200, I want you to know today that $200, as a new investor, you're probably going to get anywhere around this. So you end up having your $200 plus an additional around $600. So you can easily turn $200 into $800 all within the matter of 1 hour. Because we're going to use cash, entry, and the last one is interest. But just $800. So $200, for every $200 you can actually get $800 a day in the bear market. Doesn't matter if you want to use a perpetual real estate, doesn't matter if you want to, whatever the asset class is, you got to understand there's going to be a paper asset to go over it. You may say, well, I go out here and I flip cars. Okay, you flip cars. So the asset you're using is titles. And you are doing something within less than 12 months, so you're going to pay capital gains, you're going to pay 20%. If you held the car over 12 months, you only pay 10. So that's what you do. You flipping titles. Oh no, I have a buy here, pay here place. Okay, well, now you're writing bonds. What's your terms of your bonds? Because you're writing automobile notes. Oh, I normally do 36 months of, okay, there we go. You're back to your bond writer then. Some people can actually do different type of deals. But the reason I started off with this today is to kind of take all the mirage out of everything. The more and more people that I have met in my time in business, the more and more they continue to use terms, misconceptions, misdirections. And I don't know what it is, because maybe it's the new great thing. I mean, if you out and right now you invest in the Bitcoin, you're going to have what everybody else, Bitcoin winner right now. But the reality is that the last time I checked, you may not want to start in that asset class. You may not want to start off on funding legal entities you can't own an equity stake in. That may be not the thing, because you're going to be exposing yourself. Instead of leveraging your money, you be deploying it, because you're buying, which means you spent it. So that may not be the thing. You may need to learn first, because here's the interesting thing. At the end of the day, these are businesses. So you must become a business person. If all you do in your personal life is consumption, you get paid, you consume. You get paid, you consume. What does that mean? You might as well take a big dump truck, back it up into wherever you see a bunch of dirt. What's your dirt? Your income you got on a Friday or Tuesday, whenever you get paid. And then you haul that sucker off to another business who takes your dirt away from you. And what am I talking about? They're taking your cash and they're taking your foundation away. Every time you see a dump truck now, I know a lot of times you're on the interstate, you don't want to ride behind a dump truck because they're throwing these little pieces of dirt. I just want you to look at, that's other people who messed around and lost 90% of their money in the first 90 days, and it's hitting your windshield. As long as it's not rocks, it may put little dents on your car. If it's rocks, it'll break your windshield, because people are losing cash so fast because they are dump truck investors, which means they get paid, they have a dump truck, back up until they load of money, and then take off. And they like, well, I'm a business owner. Well, you never have no cash. Your allocations are off. I share that today because the power of three, and I'm going to go more into detail in our subscription this week on the power of three, on cash, entry, and interest. We're going to talk from two different perspectives. Got an expert that I've been talking with. He's over at Nexus Capital, and another expert I've been speaking to that's over at VCI. And we're going to have some conversations with those two experts. We're going to have this conversation behind in our subscription, and I hope you guys can join us for that, because I think it'll be a great opportunity to see two different perspectives. I know a lot of times you guys see me right here on YouTube, and again, if you never like, subscribe, follow our channel, make sure you click it today. We have a lot of good information that'll be coming out. I wanted to talk to you regarding the power of three, to get you really focused, to get you saying to myself, man, I thought I was in real estate. I hear a lot of guys, especially on IG, man, you don't know it. Real estate is the thing. Real estate is the thing. You're bond writing. You're a bond writer. That's what you do. There's nothing wrong with that. I don't think there's anything wrong with that. But just remember, if you want to make money, you have to move from being bond writers, guys, because all bond writers write fixed assets. So these assets as a bond writer, they're fixed. 12 months. It's locked in. That 12 months, if the rent goes up by 3% or 4% the next year, you increase your bond by 4%, but it's fixed. Now, you can have a lot of fixed assets, but if you're going to be a really good business person, you're going to have to get into writing different paper assets where they're not just fixed. I don't disagree with real estate, because people ask me all the time, do I deal in real estate? Well, my answer is yes. But I have to add legs to fixed assets, because if I just have fixed assets, just one fixed asset, I don't want to be in that asset class. That's what most people start off at. It is a wonderful asset class to practice bond writing, local municipality bond writing on perpetuities, 12-month leases, 24-month leases, 36-month leases. It's perfect. But if you don't get into making a lot of money, like turning $200 into $800, then it's important that you understand the leverage here, leveraging your money instead of deploying it, deploying consistent money. So, every 200, I'm getting 8. So $400 is 1,600. If you got $600 there, you're not dealing with 1,600. So you're going from 2 to 8, then you're going to go from 4 to 16, then you're going to go from 6 to keep going. You get my point. Because at the end of the day, what you're going to find out is that I'm jumping up and I got $2,400. And then your interest. That's the most important thing. Protecting your money, making sure your entry's right, and gaining your interest. Until next time, don't forget to like, subscribe, and check out our subscriptions. Have a wonderful day.